Here's an easy one. Ryan asks, is it okay if I give a friend your number? Yes, Ryan. Yes, it is. Hello and welcome to the Durham Talents channel. My name is Jesse Durham. We're back for another installment of our question and answer series. I've had the gratification this week of talking with one client in particular who said that the question and answer series was a big help to her, and we'll actually address one of her questions to kick this off and get started. So again, down in the comments section, let us know what your questions are about the infinite banking concept and how to apply it. Let's get started. Paula asks, can I get more than one policy on myself? That's a great question. The answer is maybe. The answer is yes. Yes, you can. It is possible to have more than one policy on yourself. But of course, at time of application, there are always questions to be answered like, well, how much coverage do you already have in place? Are you eligible, of course, based off of your age and income and health? So there's an application process, but at face value, see what I did there? Dad jokes for days. Face value. But at face value, the answer to that question is yes, you can have more than one policy, even on yourself. You can have more than one policy on one body. My wife and I, we've practiced this concept going on 8 years now. We own multiple policies with multiple companies. So thank you, Paula, for that question. Ryan asks, is it okay if I give a friend your number? He was looking at putting money into an IRA, and I told him that I might have a better option for him. Thanks, Ryan. Absolutely. Of course, our contact information, we'll always share that. And the business model that I have here, having started myself as a consumer, I heard about this idea from a friend, read the book, saw a presentation, called up a professional, got my questions answered, bought a policy, implemented this concept, practiced for years. Now, over the past few years, we've been coaching and mentoring folks. We've been writing policies for folks for their particular situation so that they can practice the infinite banking concept. So, I'd love to be able to hear from your friends, family, neighbors, anybody that you'd like to send our way. I appreciate the conversation that you and I had, and I appreciate you sharing. Also, on that note, I don't say this often, but if you're listening to this and you're not already subscribed, of course, I'd love to have you subscribed and get the notifications turned on. Do all the internet things. Share the word. If you're getting value from practicing this concept, if you're a client already, share this channel, share this podcast with those that you'd like to see have the same powerful financial information. I'd love that. Appreciate that. Appreciate you. Keenan asks, what if in a given month I can't pay my premium? Am I penalized for that? So that was a question that came early on in a strategy call with a prospective client. And that's a good one to have. I mean, in this financial world that we're living in of pandemics and shutdowns and wars, there's all these different things that are going on. It's good to know these types of questions. And in fact, again, when you know what's going on, you'll know what to do. You should know what your contract says. So I love, and I've done a particular episode, look this up, don't know the episode number off the top of my head, but I've talked about the flexibility of a properly structured policy for the infinite banking purpose. There is flexibility, and that flexibility is going to be based off of the conversations that we have about your particular situation. But my answer, I can't speak for anybody else. My answer is yes. A properly structured whole life policy with a mutual company that pays dividends should have the flexibility to receive additional premium payments above and beyond what you're scheduled to pay. And also, there should be flexibility in an optimally designed policy for you to be able to cover what you could call the basics to keep the policy in force during a given month. Let's say you had some mental, physical, emotional, financial, you had some kind of crisis, job change. I mean, there's just so many different things that could happen. And you have something going on in your life where you can't fully fund that policy in that given month, yes, you have lots of options. One, you could just pay whatever that minimum amount is on that particular contract just to keep the policy in force, even though you're not fully funding it in that given month. Could you even abstain from paying from your cash flows altogether because you've built up cash value in that policy that you could borrow against to pay that premium? Yes, you could do that. So there are lots of options that you have as the owner of such a policy. You should be aware of them. I appreciate that question, Keenan, about the flexibility of a properly structured policy. And if you'd like to have a conversation about that for your particular situation, financial situation, let's have that conversation. Thank you, Keenan, for that question. That's a good one. Our next question is from Pearl. Pearl asks, can you recommend someone to me in Cleveland, Ohio? Yes, me. No, I'm not in Cleveland, Ohio, but we live in an age where we can communicate. I'm obviously communicating right now in this podcast and YouTube channel and everything else with our Zoom calls and our phone calls. And, what I'm getting at there is, I have been practicing a concept, the infinite banking concept now for going on 8 years. Never personally met R. Nelson Nash, but I read his book. I watched all the information that I could find for him online. I figured out that this was for me. I learned about this enough to know that I was going to implement this concept personally into my life, and I did. And I'm just saying that, I eventually got to see a presentation about this concept. So I've read people's books and watched people's presentations who were strangers to me at the time of me watching them. And I'm not discouraging anybody from vetting this concept and vetting the individual that you want to work with. That's a good thing to do. I highly encourage that. But also, this is not you going to a box store in your town and walking through the door and asking for life insurance. What I'm encouraging everybody to do is to vet this concept in and of itself. Read Nelson's book, Becoming Your Own Banker. Also, if you're seeing our information, dive in on our channel, get to know us, in that way. And of course, you can reach out to us and we can have a face-to-face conversation. We can have a phone call. We can have a Zoom call. We can have a face-to-face conversation so that we can get to know each other and see if it makes sense for us to help each other in getting you started in practicing this concept yourself. So can I help you in Cleveland, Ohio? Absolutely. Am I in Cleveland, Ohio? No. And I understand why you want to ask that. Of course, we're told to be very careful, and we should be with our information these days. If I were a medical doctor, I could understand that you would have to physically come to a clinic for us to be able to see each other in that particular regard. But I've really put myself out there on the interwebs, and you can find me. And if you would like to know more about how to implement this concept with me, don't hesitate to reach out and learn more so you can make that choice for yourself. Thank you, Pearl, for that question. That was a great one. The next question is from Bruce. Bruce asks, why not buy term and invest the difference for that 8 to 12 rate of return that I hear about? He says, I've hosted Financial Peace University at my church for years. And that's his question. Why not buy term and invest the difference? Now, in that conversation with Bruce, we got to answer a bunch of other particular questions. This one's for the benefit of everyone here. Bruce is a serial entrepreneur, has worked for himself for decades, going to continue to work for himself, doing big things, making great things happen. Talking about growth and scale is an amazing conversation. But I understand why he wants, so again, even once we've decided, okay, this concept, this is for me. Yes, I want to be my own banker. That's not addressed anywhere else. Becoming your own banker, that comes from R. Nelson Nash, from his book. He's the originator of that concept. He's the one who codified it in his book, Becoming Your Own Banker. And when somebody latches on or catches on to this idea of becoming their own banker, they're ready to implement that. We still have all this other stuff that we bring to the table. Nash would call that the noise. So we still have all this financial noise that we're bringing to the table. And we're trying to blend that with knowing that we want to become our own banker. So it's a valid question. Why not do this? That's a valid question. It's a good question. We're going to get to that. But I'm also trying to point out some context that Bruce is an entrepreneur. My question is which business beyond your own does it make sense to focus on? See, here's what I'm pointing out. Everything is financed. Either we're paying interest from using somebody else's money on their terms and conditions, beholden to them, or we're capitalizing for ourselves, forfeiting the opportunity to earn interest, and then liquidating that. So with Bruce and lots of others being individual business owners, big business owners, serial entrepreneurs, whose business does it make sense to focus on more than your own? Again, this isn't investment advice either. You do what you want to do, but I'm asking the question, why park money for decades elsewhere outside of your business, knowing good and well that you're going to be working in your business today, tomorrow, next year, 10 years from now. You're going to be building your business. Nash says, the thing that makes the most sense to do next is to be in the business of financing whatever it is that you're doing. Now, if you're not a serial entrepreneur, but you have a household like I do, okay, be in the business of financing your household, your cars, your appliances, your mortgage, your kids' college, the vacations that you take, all the things that you're already doing just as a household. Why not be in the business of financing that? Okay, but if you are a business owner, whose business do you want to see thrive better than your own? Okay. So if you're wanting to be successful in your business, and Bruce is, and he's going to continue to be successful, but the most profitable thing that he could choose to do next would be to be in the business of financing his business. Okay. That's what I'm asking him and everyone else to consider. What if you were in the business of financing what it is that you're already doing? You don't have to assume any more risk to do that. You don't have to lose control of your financial situation to do that. You don't have to work any harder to do that. You don't even have to change your cash flows to do that. But by adding one step to what it is that you're already doing, you can immediately be in the business of financing whatever your business happens to be. And that's the most profitable thing that you could do. Now, if you want to move beyond that, because everything's financed, all these other programs and entities and products, they're financed one way or another. But the most profitable thing that you could choose to do is to become your own banker. So that's a great question, Bruce. I appreciate that. We had good conversation. I definitely look forward to the next one. Thank you for the question. Next, we have a question from Gene. Gene says, I can get by with X amount per month to spend. Can I put all this extra towards my policy? That's actually a particular situation, and I've had to do that from time to time. Some folks need encouragement to think with imagination, like Nash would say, to get to something that's realistic for them when talking about premium amounts. Some people need encouragement or motivation to consider being more ambitious, more imaginative in how to implement this process when it comes to premium amounts. But also, I say, from Nash's words, that should also be tempered with what's reasonable and logical for you. So when picking premium, it should be somewhere between something that is imaginative, ambitious as a number, but it should also be reasonable and logical. It should make sense for your situation. And somewhere in between those parameters, we're going to arrive at a serious number for someone to consider. So I don't tell people what kind of premium they should be paying. Now, you can tell me about your financial situation and what your current actions are and what your goals are, both short-term and long range. And with third grade math, like Nash says, we could arrive at knowing what it's going to take for you to be able to accomplish those goals. But I don't tell people their number. But Gene came to me saying, well, hey, I can survive off of this a month. And he used the word survive. And I mentioned that because, there are also some folks that need to be maybe dialed back in just a little bit because they are maybe getting a little to one side of that spectrum in picking an appropriate amount of premium, and maybe have to be dialed back. If I were to err, I would rather err on a slight side of being conservative in picking a number, because here's why. The future is unknown, James Nethery says often. So while we're going through an application process, and while we're getting a policy for any given individual, including myself, I want to get as much cash value and death benefit and everything that I possibly can out of that particular time and situation. Okay, because the future is unknown. So whether it's someone's first policy or whatever, doesn't matter. There are lots of things that should be considered, and when picking an appropriate amount of premium, it should make sense given the totality of the circumstances of that individual. And what I'm saying is we want to make it worth our while as much as possible, and yet we also want to be reasonable and logical in picking a premium amount that's going to make sense, that we also can build on in the future, God willing. Again, the future's unknown, but Nash in his book talks about a system of policies as well. So while my insurability in the future is unknown, so when I'm in the application process at any given time for myself, getting another policy on or in my system, my financial system, my wife and I, we own multiple policies with multiple companies. I want to make the most out of that given situation, but it must also be appropriate. So in addressing that, I made sure to tell Gene that I don't want him to just be surviving in the meantime. I want him to be thriving. So we dialed back a little bit of what he was leaning into, but I love, it's easier to dial back than it is to push forward. So my encouragement to everybody is when you're considering this idea and implementing it, and you're vetting the concept of becoming your own banker, consider those parameters in picking an appropriate amount of premium for you. And by having a conversation with a professional that's practicing this concept themselves, you can get some real key insight into what to consider for premium for yourself. But again, overall, when you know what's going on, you'll know what to do. So I'm here to speed up everybody's learning curve and help educate and point to the appropriate information in Nash's book so that you can arrive at knowing what's an appropriate amount of premium for you. We had to dial things in for Gene, and that was a good conversation, and I look forward to our next one, and I appreciate that question, Gene, very much. Maynard asks, I have a $20,000 looks like windfall coming from a settlement in the near future. Can I pay a lump sum into a policy? It's a great question. Yes is the answer, that there are one-time premium policies. Now, they certainly don't have the same tax treatment as a properly structured policy with ongoing premiums into the future, like what we talk about here on the channel, or at least mostly. So a properly structured whole life policy with a mutual company that pays dividends for the IBC purpose should be structured with ongoing premiums. That's how we maintain a preferable tax treatment. We avoid what's called a MEC, a modified endowment contract, which is still a policy, but the tax treatment is different. Now, are there options with lump sums? Well, sure, there are options with lump sums on structuring a policy to accommodate that. First, of course, I would say, is there a policy already in existence where it would make sense to put a lump sum or a windfall, whether that's additional paid up additions premiums paid, whether that's an outstanding policy loan interest or policy loan itself by being an honest banker. Are there premiums that we need to pay on existing policies? Next, are there interest amounts that need to be paid on policy loans, or is this an appropriate time to pay a policy loan back? And of course, another one is it time to add to our system because of this windfall that we are anticipating? Every situation is going to be different. Now, those first three options of paying additional paid up premiums to an existing policy is a great option. Paying policy loan interest or paying back a policy loan itself. Another is when you are structuring a new policy, you're going through the application process and a new policy is being structured. It is possible for a new policy also to accept a one-time premium at the beginning of that policy above and beyond the regular scheduled ongoing premiums for that policy. And there are other things to consider there, but is that possible to pay a lump sum additionally above and beyond regular ongoing scheduled premiums into the future, ones that are on a monthly basis or an annual basis or such? Yes, absolutely, that is possible. And that's, again, just one more reason why you need to be talking to the appropriate professional. Of course, Maynard we had a good conversation, but I want to share that here for the benefit of everyone. And again, point out the importance of having a conversation where you can talk about your particular situation with a practicing individual. Thanks, Maynard, for the question. The next question comes from Garrick. Garrick asks, I am retired military. Thank you for your service, Garrick. I want to say that, and I appreciate you. He says, I'm on a fixed income. We homeschool our children. I do flip houses on the side, but I'm on a fixed income. He says, in your process, are you my guy or do I get passed off to someone else? And what's the minimum? Because I've spoken to others and they had a $10,000 minimum to get started in their process. So that's a great question. I'm not here to comment for sure on anybody else, what they do, why they do things the way that they do. My approach to writing contracts, writing policies for folks that want to practice the infinite banking concept is individual. I don't have a cookie cutter approach. Outside of, yes, there are standards that we can all know and understand from reading R. Nelson Nash's book, Becoming Your Own Banker. I mean, he talks about his key principles of thinking long range, not being afraid to capitalize, not doing business with banks, being an honest banker, and rethinking your thinking. So he talks about these types of things where I'm going to answer your question with those filters. So am I your guy? If you choose to, if we choose to work together, that's you and I. We had a conversation on the phone the other day. Look forward to our next one. But for the benefit of everyone here, we get to talk together with each other in our process. We have a set process more than once. We'll talk more than once before you have a policy and you're on your way to becoming your own banker. But you'll get to vet me. I will get to vet you. We'll get to figure each other out. Get to look at your particular situation. You'll be able to ask me particular questions that you'd like to ask me. I personally practice this concept myself, and I've been helping others do that for a few years now. And as far as minimums there are some industry standards. I mean, at the end of the day, we are getting whole life insurance with mutual companies. Okay. And that means there are going to be questions about age. There's going to be questions about health. There's going to be an underwriting process. And to be able to structure a high cash value policy with a mutual company that pays dividends properly for the infinite banking concept for that purpose, yes, there are going to be some minimums, some maximums. There are going to be parameters for you and me and everybody else when applying. I mean, how much coverage can we get based off of that underwriting process, and how much premium can we be paying? So that's all worth looking at. It's all going to be looked at in the underwriting process. But right off the top of my head, again, no, I don't have a cookie cutter approach to, well, you got to pay X amount of premium or I'm not going to work with you. Again, there are going to be parameters based on the insurance regulations of a given state, on certain things. And also to achieve a properly structured policy. There are going to be standards that we're looking to meet that I've just mentioned right from Nash's work. But as far as, what type of communication can we have? Direct communication. And then what's going to make sense for you? I don't know. What do you think is an appropriate amount of premium for you? And we can base that off of our strategy calls. We can base that off of you getting educated in, the infinite banking concept by reading Nash's book, Becoming Your Own Banker. And you can carry on. Read his second book, Building Your Warehouse of Wealth. Dive in on the 2+ years worth of information on our YouTube and podcast. Okay. And let's talk about your particular situation to figure out what does make the best sense for you. And for everyone else out there, if you have a question that you would like us to address, feel free to put that down in the comment section or to have a direct conversation about how to implement the infinite banking concept into your household or business or investing. Then we can have that strategy call when you reach 828-817-4223 or email durhamtalents@gmail.com. This has been a great pleasure for me. I look forward to our next conversation. Have a great day. Take care. Is it all right if I give a friend your number? Aye, it is. That's a wrap. Lunchtime.